Well, good morning and welcome. You are watching Market Cafe on ET Now. I'm Nupur, and joining me on the broadcast is Merrill. And over the next half hour, we take you through what's happening in the global markets and how they're going to track before the India markets open. So let's begin with what's happening in the U.S. markets. Well, the U.S. equity futures seem to be little unchanged on a Monday night after the S&P 500 has posted a losing session as investors have turned cautious ahead of NVIDIA's earnings. Now, those are due later this week, but about a key amount of trepidation that we're seeing around that. Now, also due is a key inflation report later this week. Now, U.S. stocks have closed mixed yesterday as losses in chip makers have offset gains across the broader sectors. The S&P 500 has fallen 0.3%, and the Nasdaq has lost nearly about 1%, while the Dow has added about 140 points. Now, AI infrastructure stocks have led the declines amid persistent uncertainty over returns in that sector. Talking about the U.S. bond yields now, those were lower after reports that the Treasury Department could actually use its $1 trillion general account to fund its plans to ramp up government bond purchases. Now, the U.S. 10-year Treasury has also fallen more than 3 basis points on the day to about 4.7%. Investors are also, as I said earlier, really bracing for NVIDIA earnings that come out later this week.
Absolutely. And if we take a look at how the Asian markets are faring as well, they seem under pressure, tracking a weak close on Wall Street. This is as investors have trimmed exposure to tech stocks ahead of key earnings coming in later this week. We are going to be watching NVIDIA for a lot of cues coming in on the entire tech sector as a whole. Japan's Nikkei is also down roughly about 0.9%, while South Korea's Kospi also fell close to 3% in the trading session. And investors will be looking for further evidence that the AI trade can justify its lofty valuations. Meanwhile, oil prices are tracking higher. This is as markets assess the impact of the wider U.S. sanctions coming in on Iran. Brent crude is still at about $92 a barrel, while WTI is hovering around that $85 range. Iran is also warned of retaliation, which is going to be keeping oil prices in check as well. Gold, however, continued its upward run. It's risen about 0.5%, heading for the fifth straight session of gains, nearing $4,680 an ounce. The dollar is also in focus with concerns around the U.S. fiscal policy. And for the Wall Street, broadly, the cues are cautious. The GIFT Nifty implied open is suggesting a gap down beginning to the trade today, but it's still going to be important to see how those levels sustain during the trade.
All right, and let's move on to what's impacting the markets the most, and it is the Trump administration. Now, they have unveiled Operation Economic Outcast, a global plan to isolate Iran by targeting companies and countries that help keep its economy afloat. Now, the U.S. Treasury Secretary Scott Bessent says entities facilitating Iranian oil transactions, money laundering and financial transfers could face secondary sanctions and lose access to the US dollar system. China is not being given an exemption either. Bessent said that Chinese banks and entities could be targeted if they help turn Iranian oil into money. Now, the US will first give countries timelines to shut down identified activities before sanctions are imposed. Listen in to what he said.
Iran now faces a very clear choice with only two paths before them: complete global isolation and a subsistence economy, or a path back to normalcy with an opportunity to rejoin the global economy. Today, we are launching Operation Economic Outcast to foreclose every other option available to the Iranian regime. Treasury has mapped every node, every facilitator, and every network that Iran has used to smuggle oil and evade sanctions. Beginning today, the actions of Treasury and other agencies will tighten the noose and block every potential source of revenue that funds the IRGC and the evil Iranian regime. We are enforcing a zero-leakage approach. There will be no minimal breathing space for the regime to rebuild its capacity to inflict terror against America and the world. The final refuge of this regime is a mistaken conclusion of nations that still finance the Iranian threat in the hopes of evading it. Iran's enablers purchase, transport its petroleum. They facilitate the flow of its finances through exchange houses and free trade zones. They welcome Iran's flights and maintain registries on its behalf. Any entity that facilitates money laundering on behalf of Iran will be removed from the U.S. dollar system. The clock just started ticking. The new sectoral sanctions determinations issued today target 5 of Iran's most vital lifelines that it exploits in other countries: digital assets, technology, gold, aviation, and shipping. These measures broaden secondary sanctions risk for anyone foolish enough to continue conducting business with this regime, and will accelerate the speed with which we pursue them. As I speak, Treasury's Office of Foreign Assets Control is also sanctioning over 60 entities, individuals, and vessels around the world that enable the Iranian regime to procure illicit nuclear and missile technology, conduct cyber operations, and generate oil revenue.
In fact, let's bring in Sumita to decode Besant's comments and what it means for the global markets as well.
Absolutely. And this is something that the world and, of course, global investors were watching out for very closely as the US has launched a new wave of sanctions, which is called Operation Economic Outcast. And this is essentially to cut Iran's economic liabilities and force capitulation. Because remember, it's been close to 6 months of the war. And of course, we've seen military conflict. We've seen diplomatic activity as well. However, there's not been a peace deal. And in fact, with 60-day ceasefire, that also could not stand on its own. And of course, it was breached. And that really led to sort of attacks and counterattacks from the United States and Iran. So let's come back to what Secretary Besant said. Secretary Besant underlined a couple of things. Number one, that the US is going to target all of Iran's sources of revenue, and that includes oil as well. 60 entities to be sanctioned. He also said that countries now must choose between Iran and the United States. And in that context, he mentioned that President Donald Trump has reached out to global leaders in that context as well. So this should be read. The press conference that Secretary Besant held, it should be read as a strong warning for countries and companies across the world that are continuing to do business, either economic or financial business with Iran. So a bunch of takeaways. Number one, that the sanctions are going to target 5 of Iran's most vital lifelines, and that includes digital assets, technology, gold, aviation, and shipping. Number two, the US is going to be sending timelines to individual countries to not partner with Iran economically. Third point, any entity that facilitates money laundering on behalf of Iran will be removed from the US dollar system. Now, that's a very, very crucial takeaway from that press conference. And in fact, China, with whom the US's economic ties have somewhat been on the mend. In fact, China will also not be exempt to if it tries to do business with Iran. And of course, there's not been any penalty that's been announced as of yet, because Besant said that he does not want to blow up the global financial system. Remember, the US also recognizes that if there are financial implications for countries that trade with Iran, if there are financial implications for Iran as well, then the whole financial ecosystem, the economic system will get disrupted. And already we have seen the kind of impact that President Donald Trump's tariff policies have brought about. And of course, responding to that, we did see Saeed Abbas Araghchi, the Foreign Affairs Minister of Iran, stating that this is nothing new and we are going to be fighting back. So it remains to be seen the next steps that the US is going to take, and how will countries sort of respond to that? Will they actually step back from doing business with Iran? That remains to be seen.
Absolutely, Sumita. And we'll also have to watch out as to how the markets back home react to that. Do remember the US has had a fair bit of trepidation around this. Now, sticking to news coming in from the United States, Trump has threatened to double US tariffs on Canadian cars, trucks and auto parts to 50% from January, escalating the trade war after talks on a new US-Canada deal have collapsed. Now, Canada had sought lower auto tariffs as part of the agreement. The latest threats come after Washington imposed 50% tariffs on around $20 billion of Canadian goods on Saturday. Now, Canada had vowed to retaliate dollar for dollar, while tensions have also flared over Canada's threat to restrict US access to electricity and critical minerals. And let's listen into what Scott Bessent also said on how Canada has missed a good deal offered by the US.
I think he would the table and negotiate in good faith. They were offered quite a good deal last week. They chose to reject it. Unfortunately, Prime Minister Carney rose to power on an anti-American, anti-Trump platform. I believe is more than 20 points behind, and he seems to have gone back to his old playbook. And I think one has to ask oneself: is he trying to benefit himself, the Liberal Party, or the Canadian people? Because they were offered a very good job.
Back home, External Affairs Minister S. Jaishankar, who is currently on a two-day tour of Russia, met President Vladimir Putin. Now, during the meeting, S. Jaishankar added that the economic cooperation between the two countries has grown very significantly, and he also added that Putin and PM Modi could meet on the sidelines of SCO summit in Bishkek. Remember, Putin is also expected to visit New Delhi for the BRICS Leaders Summit, which is happening on the 12th to the 13th of September. We've got Srinjoy on board, bringing in more details on this.
External Affairs Minister S. Jaishankar has called on Vladimir Putin, the Russian president. And quite important, it is to remember that in a short while at the SCO summit, you will have Prime Minister Modi and President Putin at the same place at the same time. And then after that, you will have President Putin coming to India for the BRICS summit. Now, Russia and India still have a lot of work together to do, because at this point, there is, of course, the issue of energy, because of the problems in the Gulf, India had been importing a lot of Russian oil, but there have been problems as a result. The Americans are not very happy. There's something in the American Congress which has to be kept in mind. There are also issues that relate to Ukrainian attacks on Russian refineries. That apart, India imports a lot of Russian fertilizer. India and Russia also work together in areas like defense. Even today, India is buying some new Russian equipment like the S-400. That apart, there is issue about all kinds of spares for the weapon that India has, Russian still. Apart from that, you have atomic energy. Once again, there is Kudankulam. India has Russian-made nuclear reactors. So civil nuclear energy is very big as well. So there is space as well. So as a result, whenever India and Russia have a meeting, as there was this time, there is quite a lot to talk about.
In fact, let's listen into the man himself. This is S. Jaishankar on ties with Russia.
Mr. President, and let me first of all begin by conveying the good wishes of Prime Minister Narendra Modi. Thank you. Excellency, he has given me a personal communication, which I would like to hand over to you. We have this morning had a meeting of the Intergovernmental Commission. I think overall we have a good report to give to you. I think our economic cooperation, trade, energy, fertilizers, nuclear, other dimensions as well. I'd be pleased to speak about it in detail, but overall I think our economic cooperation has grown very significantly. Prime Minister Modi looks forward to meeting you at the SCO summit, then welcoming you in India for the BRICS summit, and in due course, as per your mutual convenience, having the annual summit. So we have, Excellency, I think a very strong picture of cooperation to present. And I again thank you very much for the honor of receiving me today.
Well, Meryl, that's a fair bit of, geopolitical commentary that could have an impact on the markets at home. But we slip into a very short break here. When we return, we are going to be tracking what's expected in the Indian market. So do stay with us. Thank you for staying with us on ET Now. You are watching Market Cafe. Well, Tata Consultancy Services has said that it will acquire a 100% stake in MHP, which is a subsidiary of Porsche AG, for an enterprise value of approximately 3,574 crore rupees. Now, the acquisition is part of a broader 5-year strategic partnership that's valued about 1.25 billion euros between TCS and the German sports car maker. Now, as part of the collaboration, TCS will establish a dedicated AI mobility center for excellence for Porsche. Now, this center will focus on industrializing AI use cases across the automaker's manufacturing, engineering operations and customer experience segments. ET Now Senior Executive Editor Sajid Mangat explains the details.
TCS has entered into a strategic arrangement with European car maker Porsche for acquiring its unit consulting arm basically for 320 million euros. The entire deal involves acquisition of the consulting arm, which is MHP Management, and along with that there is also a strategic deal that comes in with these for TCS, wherein Porsche would be will become a client for TCS and will have a potential revenue of 1.25 billion euros over the next 5 years. The entire deal will require TCS to also onboard 4,500 employees of Porsche and create a center of excellence in Germany. It will also allow TCS to get access to over 300 customers, which includes Porsche. Porsche accounts for nearly 40% of revenue, 30 to 40% of revenues of MHP, and then other clients, which includes the Volkswagen Group and there are other clients from a defense and aerospace industries, which account for other revenue. The deal also, as I said, is acquired for 320 million euros and has an enterprise value that's roughly around 5 times EV by EBITDA, because this MHP has a EBITDA of nearly 10% and what TCS is acquiring is the entire operations of MHP in Germany and some other countries where MHP has its base. It's also accretive in nature from an EPS point of view in the first full year of operation. The deal is expected to be completed by end of the calendar year, and the revenues will be consolidated with TCS in the fourth quarter of FY27. The first full year of FY28 will be EPS accretive for TCS, and TCS is hoping that because MHP is currently on site, it will move some part of it to offshore and help in improving the margins as a whole. So there would be an initial impact of margins on TCS there for initial period before the entire integration happens, which will take at least 12 to 15 months, and then it hopes to get back to the same level of margin, which is about 25% going forward. So the deal, as I said, is going to add roughly around $1.25 billion euros to TCS over the next 5 years, and it will make sure that the European operations, which currently is around 10 to 15% of the revenues, gets a boost, because it's another 10% additional revenues coming in from the automobile point of view for TCS.
In fact, the early views that we're getting in from the state seem to be quite mixed. Citi remains cautious and is maintaining a sell rating on TCS while continuing to remain cautious on the Indian IT sector as a whole. The key concern coming in over there is M&A-led growth, which could mask weakness in the existing book. Meanwhile, MK is also more constructive. But we did, in fact, speak to Piyush Pandey, Senior Vice President and Equity Analyst at Centrum India. Let's listen in and take his views as well.
See, the acquired company has a revenue of close to 790 million euros with a EBITDA margin of around 10%. So broadly, the deal takes place at EBITDA of around 5 times, EBITDA revenue of around 0.3 to 0.4 times. So I would say very reasonable valuations. But this is what I would say. Many IT companies have increased acquisitions in recent past, primarily to fill gaps in the portfolio, mainly to get new marquee clients. And this is what even like say Wipro or Infosys have done. And so probably I would say this is in line with the trend. And Indian IT companies are looking to acquisitions to both fill the gaps and in fact drive overall revenue.
All right, so quick look at the Nifty implied open. It's down about 55 points, but we'll have to wait and watch as to what's happening in terms of geopolitics. How much of a play do we see in the Indian markets? That's all the time we have right now on Market Cafe. Thank you very much for joining us, but the market is up next, so do stay with us.